These videos are not financial advices. Everything shared here is provided for educational purposes only. Welcome everyone to another trading session. Today, I'm trying to take some trades using candlestick psychology strategy. So here, the market is bullish. We have uptrend and also the minor trend is bullish. We have this little trend line and I have this supply area. Okay, I'm entering right now. This is my lower time frame entry intersecting with the third touch of this trend line. I'm expecting a red candle anyways. If not red candle, I need a rejection from this supply zone because we do have intersection and we add up reasons to take the best possible trade. Okay, so this is the demand zone. As you can see, this is my demand zone. It's happening right inside my 1 minute supply zone, which is the green area. And we add the intersection, we add the combination of this closing on the trend line, third touch of the trend line, and we can expect a green one. So I'm gonna just take a screenshot of my trades as well, and I will try to journal my trades in my little journaling app. All right, let me just look for other opportunity. And all right, new session. What was my balance before that? I know 14 something, but balance doesn't matter. I'm just journaling them just for the sake of knowing what trade I'm taking. Here we go. Yeah, so I'm gonna look for the opportunity. So yeah, about the journal, this journal basically will, you know, once you import your trades on long term, it will try to analyze, and at some point it will tell you your weaknesses and your strength about your trading style in particular, and in that way it's going to be very useful. I've made a video about it and you can watch it. All right, so this was the first trade we took. Got a nice reaction from that area, and market is still uptrend. This is just a retracement. We can just, you know, break this eventually, but we just need to wait and see where the market goes, and then we align our setups in that particular direction the market will go. This is an order block for me. Market touched. I'm assuming that there's something inside the lower time frame right on this area. That's where the price touched and went up. So I use a lot of lower time frame entries these days. If you watch my old videos, I used to not really use lower time frame. It's just my trading style. It changes over time. And yeah, in this case, see, this is a very good decision point trade. See, we got this resistance, right? Has been respecting a lot, and then it's broken. So why it's not respecting anymore? Because there's something in the lower time frame that perhaps created this force to break this. And that could be here, could be here. You just need to check the lower time frame and find your entry inside the lower time frame. Okay. All this is how market moves. Like, it keeps switching between supply and demand. And once you figure that out, it's going to be a lot easier to see the direction of the market. So right now, let's see. Let's look at the bigger picture, right? It's ranging up and down. It's ranging. I cannot rely on that. What I see here, I see one doji right here and another doji right here. And then I also see a ranging kind of market. A resistance broken like this. Next time it reacted from this area, which is definitely another overlap. There's something in lower time frame reacted from that. So the market is bullish for me. See, this wedge has been broken and now this is the retracement. Market is bullish for me. So if I see a buy setup right now, I'll take it. Even though there was this sell setup, doji break. It's not only a doji break, it's a double doji break. Would be takeable because it looks strong if combined with this little order block. That would be insane. All right, I'm waiting for another opportunity. Okay, this one also bullish. See, market keeps switching between supply and demand. What do I mean by that? Look, this is a demand, this is a supply. Market just switching between them like a ping pong. And the next area touching this one, it's another demand. Look, what do we mean by demand? Demand is basically an engulf during a price movement, right? It looks like an engulf. So this is an engulf. So if I draw this, it's going to be a demand. Simple as that. But if this demand is unfresh, if there's a shadow inside of it, it's not going to be reliable. So also keep that in mind. This is a supply, but remember, demand should cause something. Demands that are not causing anything, they are not trustworthy, okay? For example, this supply is causing, oh shit, what is that? This supply is causing this breakout. Sometimes we have supplies causing a breakout of having a very respected support. Obviously, that will be much stronger. So, yeah. I'll keep looking. I don't see any good opportunity right now other than the first trade we took. Other than this one. I haven't. Okay, this is another demand. See how it reacted? Market is actually good right now, but we have lack of setups. We have lack of setups. By the way, I'm launching the mentorship intake, and it will be started. In case you're interested, you can join Telegram channel. All right, so this is the third touch breakout potential trade for me, but look, okay, so it didn't break. It's closing on the trend line, but we got gap down. See the gap down right here? We cannot trust that. Okay, I'm gonna take this one. Wait. Oh, we're going inside another demand. Let me see if I can find a very nice entry. Support that trade. Alright. Okay, I'm taking. Let's go. Oh, I wish I took this trade only. It would be amazing if I won both of them. I won both of them. Holy crap, bro. I was lucky on the first entry though. Okay, so this was my third and fourth. There we go. Took 4 trades. All of them went. And I will explain why I take this. So basically, the reason why I took this trade is simple. We have third touch breakout right here. First touch, second touch, third touch, broke it, right? One of my entries were immediately. Basically, when you enter immediately, it means that you expect the next candle to be green, right? But you can make your entry even safer if you look back of the chart and see something. For example, if you look back here, you'll see demand areas. So I went to the lower time frame and demand zone, this demand zone, right? And I found this entry. See, there's nothing here yet. I go one more. You see this gap? This gap definitely is something in even lower time frame, right? It doesn't show it here, and this is where the price touched and went up. So overlapping levels and gaps can be lower time frame entry because they are something in even lower time frame. For example, if this is 15 second, sometimes we have that in 5 second or something. Okay. Of course, if we don't see that in 5 seconds, it means that yeah, we do see that in 5. See, 15-second gap, we see that in 5 minutes. So this is going to be the entry which price touched. See how precise it touched. And this would be the best possible entry you can possibly take on this particular trade. And the worst possible entry would be entering immediately, which was my first entry. And the second entry was amazing. The first entry was risky, the second entry was amazing, and I'm gonna just call it a day, just like that. I'm calling it a day. Did you follow the rules? Yes. I mean, yeah. Sometimes I need to be a little more patient. Thank you for watching, everyone, and peace out.